Hello traders, this is CarlFX. I'm just going to make a quick video on supply and demand. I want to see what is supply, what is demand, why demand and supply zones, and how to plot the supply and demand zones on your chart. So this is just going to be a very simple video. So first, we're going to look what is supply. According to Wikipedia, in economics, supply is the amount of something that firms, producers, laborers, providers of financial assets, or other economic agents are willing to provide to the marketplace at a given time. This is not, time has not been included here, but you need to have time when something is being provided to the market. Also, what is demand? So demand simply is, demand is the willingness and ability of someone to consume a particular good or service at a specific time. Simply, I think there's a lot of explanations here, so I won't go into that. Simply, I just want you to understand supply and demand. So, what is supply and demand in forex? We have our price points here, and on the right, and down here we have our time lapse. We see this is the daily chart, so we have March, April, May, and so on. So, speaking about supply and demand, we surely will be looking for supply and demand to occur at certain price levels. We won't be talking about commodities, we're talking about supply and demand in forex. So, we are talking that if price comes to certain levels, there will be supply, and if price comes to certain levels, there will be demand. Demand will be created. So why do we use supply and demand zones? Because big institutions use the same supply and demand zones. Areas where there is supply and areas where there is demand. It means areas where there is liquidity. Areas you can use those areas to trade. You can identify those areas and use them to trade in your day trading strategies. Whatever, I know everybody has a strategy, but you can incorporate this and use it as one of your strategies. So, how do you plot the supply and demand zones? So, simply, we're going to see, there are a lot of ways to plot the supply and demand zones. First, you can plot them on the consolidation areas. So I'm just going to look at the major zones. So second is the rejection areas, and third is the single print areas. So how do we do that? First, let's start with the consolidation areas. So we're going to use our rectangle tool right here. Remember, this is a daily chart. So the consolidation areas, we want to see at a zone which we see that price has consolidated, and see if it will provide a nice level of supply or demand in the future. I want to go to the back. Yeah, I'll do a little bit of history and see. Okay, so we'll start here. This was January January 26, 2015. This one. So areas of consolidation. I see now. Okay, I'm going to mark this place. I'm going to mark this place then. Okay, there. So areas of consolidation. How do we know that this could be a supply or demand zone? So take for example this area here. Remember, we don't have the right data. We only have this data. So look at this place. Look at this consolidation area. This could be a supply or demand zone, depending on where price is going to be. So always the supply zone is going to be on the downside, to be on the floor. So price simply just comes down and hits a supply zone. I mean, it hits a demand zone. The demand zone is always going to be on the bottom. Price comes and hits a demand zone, then people start to come into demand of buying. So they start buying. But before buying, price might be chopping here, creating value. Then when value is enough created, then they will pump the price up to the last level of supply. If there is going to be more demand, price will be likely break this level. But if there will be more supply, price is going to go back lower again, and vice versa. So simple like that. So now we see that price has been descending for a while. Price had been descending for a while. Then recently it came to a pause, sideways pause. Then we say maybe this will be an area of demand or supply. And indeed, it was an area of demand. We see price came down here, it started to rally up, it started to create value. It created value, then later off, the demand zone turned into supply zone when price went down. When you look to the next prices level, we see that this area was pretty much respected as more as we went on. So it was once demand, then it became supply, and then you just see the rejection of this candlestick right here. So now it is supply. Then price comes and rallies, comes back to the level and gets rejected. Or supply comes in and price goes. Oof. You can see. So it went on and went on for, I think this was from January to July. The supply zone held. It held for 6 months until when it was on September. I think no, it held almost for the whole year until October. So for the whole year, prices had been respected in this area, as we see right there. All this time, price was just respected on this area. So this is just simple a supply area. So we just choose a consolidation zone to plot out our area of supply, as you can see right there. So the next thing, we're going to see areas of rejection. But before we go to that, I want to show you another area of consolidation. Okay, let's not go far away. Let's look at this zone here. Price has been accumulating for a while. This is from 3rd December to 4th February. For 63 days, price had been in a sideways movement. What is it doing? It's creating an area of demand or supply. Okay, we are talking about demand and supply. Okay. Then when you look to the right, it was an area of demand being created. Price came to this area. It was an area of demand. It rallied on the area. Then later it broke above. It came back to the area, then it was supported again. So we had the first support, second support, third support, until price came and broke that level out right there. So we see how much this demand zone was strong. It held for about 357 days. It's another whole year. Another whole year, this area was an area of demand. People were just when the price came here, the big institutions just bought more. No one was selling anymore here. Bought more. You can see. So that is simply for the case of areas of consolidation. This is for the supply zone. This is for the demand zone. Now, let's see another area of consolidation. Okay. We can also see this area here. This area, price came down, then price started going sideways. Why? It's creating value. And it became another area of demand. When price even came here, it shot up. Not for a long while because the trend was still strong, or was still in an uptrend. That's why it just kept on going up. But for consolidation areas, I think they have a point. We can just see one other example. I'll just try and go and see if we have any more past years here, any more data. Okay, I think that's it. Okay, so I'm just going to scroll simply, slowly, and see an area of consolidation. If we get it, that will be good. Okay, this one here. Let's see. What did it become to be? Was it an area of demand or supply? It was an area of supply. Simply. Price comes, rallies up to that area, it gets rejected. Back again, supplied to the low, as you can see here. So that is just another example of consolidation. I hope now it's clear. So we are going to see another example on rejection areas, where price gets rejected once and never comes back to that area again. Maybe if it comes, it just comes to retest those areas. So we have just an example here. As you can see, this area here, price was only rejected once, and then it pulled away. This becomes our area of interest. As you can see, it became an area of supply for a while. Price came, rallied up, went down for a long time. Another area, this one. Price just came once until it came again. It was broken. And remember, guys, when supply zone turns into demand, it has to be a big candlestick. You see these ones? These are very big candlesticks. They broke, showing that the momentum was very, very strong to the downside. Now it was able to break this demand zone and it turned into supply. And you see here, before anything happened, we see multiple rejections. You could get big movements on the smaller time frames. You can see this back and forth was just like 157 pips, but it happened for like 21 days, 20 days. I'm sure people were trading the euro. That's why it was moving in that way. So this move was crazy, man. It was so crazy. So you can just see the single print rejections, how they turn out to be. Okay. Now let's see. You have another rejection here. You have another rejection here. You see, it later became, it was a supply zone. It came to be a demand zone. You see the pressure that was used to break this zone, and people started to continue buying and going long. You can see the pressure, the market pressure. You see, so that's just simple. Okay, let's find another single rejection. Yeah, we have a single rejection here. This was the first rejection. And you can see when price came to the second time, it rejected again that level. And the other times, price was just simply declining to the downside, indicating that this area, sellers were now in control. The supply zone was so strong, as you can see. Another single print area, this one. You can see when price, this, I think this is up to the recent action that is going on. They are just single prints, just wicks. You just see wicks coming here, being filled, and then price goes below. You see the pressure after this wick was just touched, the pressure. You see the hammer, the sideways movement. You see. So this is just simple about single rejections. So the rejection areas are pretty much, the single print areas are pretty much the same just as the single print areas, because, okay, we can just see here, okay, this area here, this is a single print area, just one candlestick. When you get price probably to this area, it will be rejected because there were many sellers in this area, many people to sell in that area. You can see another zone is right here, the hammer. This is a single print area. Another zone, this is a single print area. The hammer being rejected. This is the recent one, so you'll get time to see it forming out, appearing to be, So these areas are very crucial for you to see. When price comes to these levels, you have to be very careful because you might be, it will help you making your decisions to either to supply. Do you need to be a seller because liquidity is being supplied into the market, or do you need to be a buyer because there is more demand for buyers into the market? Just as simple as that. Just as simple as that. Nothing complicated, nothing more. You see, nothing more, nothing else. So now we want to see, how do we plot the supply and demand zones in our charts? How do we plot them and use it to our trading? So see, if you're an intraday trader, as I am an intraday trader. I trade every day. Not every day I get a good setup, but I trade every day, meaning I look at my charts every day. If a potential setup reveals itself, I trade it with no fear. So how will you use the supply and demand zones to your trading if you're an intraday trader? I don't know. Maybe you're a swing trader. If you're a swing trader, I advise you to use the supply on demand zones on the weekly time frames. So on the weekly time frame, all this area is an area of interest. Could it be demand? Could it be supply? We don't know because price is currently trading in this area. As you can see right now, we need to close below this week. This week, we need to close below here. We have an engulfing candlestick, which is nice, signaling that there's going to be more bearish movement to the downside. But remember, the weekly time frames are so slow, you have to wait for the whole week for the pattern to close. I am patient, but I am not that patient. So I'll just focus on the daily chart because I'm an intraday trader. So in the weekly, we see that this area price yesterday has been closing below, but closing below in the daily chart also means rejections to the lows, to the lows of the day, lows of the week. So you can't make any trading decisions if you're in the weekly chart and say that you want to keep selling. I think you're just going to be pissing against the wind. You're just going to be trapped. So what do we want to see? We want to see this gone, and we want to plot only two major zones. So we want to plot only two major zones. What zones are they? There's a supply zone and there's a demand zone. You only want to have two levels in the daily chart as an intraday trader. So I'll just do a quick analysis on the euro that we are currently trading. This is the real time. So what I can see that our next zone, if the euro is pretty much okay. The euro is pretty much in a downtrend. You can see this was an uptrend, it was broken, and the euro is now in a downtrend, as you can see here. So as we say, trade what you see, don't trade what you think. The market is in a downtrend. So what do we want to assess here? We want to assess that if it's in a downtrend, then we're probably the market is gonna pause in this area here. And if it's gonna pause there, this will be the area of taking profits. We see now the market is in a consolidation, but we can judge this area as a demand or supply zone while it is currently forming. We need price to get out of there so that we can make our decisions or our trading decisions. So what zone do we see being a demand zone after this? This will be our supply zone, sorry. And what zone is going to be our supply zone? So the closest supply zone we can see here is this one. You see the consolidation, and not only that, when you go behind, you can see multiple rejections on this area, the single print. So all this area is an area of interest. This is an area of supply. So we already have the two major zones on the daily chart. Remember, we are intraday traders. Intraday traders use 1 hour, 30 minutes, 15 minutes to make their trading decisions. So we're just using the daily to see what is the week doing. Monday, Tuesday, Wednesday, what has price been doing? If they've been doing those on the daily close, so what am I going to do on the 4 hour? What am I going to see on the 4 hours? And if I see on the 4 hour, what do I like to see in the 1 hour and 30 minutes? So the trading decisions, most of them you'll make them in the lower time frames, but we need the bigger picture before moving to the smaller picture. So in the bigger picture, we can see that our supply zone, our demand zone is pretty much very far away. But we need to have a current zone that is going to guide us so that we cannot be in no man's land. You can see this movement is so big. We can say that now we want to, okay, now because it was dropping, we just want to sell and make a pause here. What if the market reverses? You see the market reversed, then came back down. What if it reverses on us here? So we don't want to piece against the wind. So we gotta find our minor zones. So just as we said, look at the consolidation areas, single print rejections, go all the way and you get our minor zone. So this is currently our minor zone. So some people were buying, but mostly they came and took profits here. So we don't want to piece against the wind. Remember that. We don't want to piece against the wind. So if this is our minor zone, so we are going to label it differently. Maybe, I don't know, I'm not a colors person, but I don't know, maybe green, some greenish, maybe in there. Yeah, I think that will work. So this is our minor supply zone, and we need to get a minor demand zone. So let's see to the left again. We get a minor demand zone. We see how price was rejected at this area. When price came to this area, we see how it was rejected. So we can't have our charts full of lines. So we need to see what is the difference in pips. Is it relevant? So we can see from this zone to this zone, we have 120 pips. That is valid. That zone will hold. So then from this zone to this zone, we have 123 pips. So this is valid. We don't want our charts to be dirty and so on and so on. So that is simply how to know the major and the minor zones. Major and minor zones. So we need to know. Now this price has just been rejected here. We can see that there is a evening star in play. Evening star candlestick in play. If you don't know the evening star, it's these three candlesticks. These three candlesticks. It's a bullish candle and a doji or a small pin bar and another bearish candle, signifying potential reversal. So we get a potential reversal on a minor zone. So we are probably going to sell. If we are going to sell, then our next profit or our next target is going to be here. Or if not here, just 10 pips before or 15 pips before. So we can just see how many pips from here to here. It's about 59. So they're probably going, don't get greedy. Don't get greedy. We're going to go for 48 pips. So just going to make a small horizontal line here and say that is going to be our next area of take profit. Remember, that is just a decision on a bigger time frame. This candle hasn't closed and it is still forming. So if it forms, if it closes as an evening star, we're probably going to sell. So what do the 1 hour time frames tell or say to you? Remember, we are intraday traders. Small time frames matter to us mostly more than anything else. So in the 1 hour, I'm not going to draw any any major. I'm not going to draw any big lines or something like that, but I'm just going to show you. So coming here, we see that this is also a supply zone in the 1 hour. You can see price how it consolidated in this area. Also, if you look to the left, you can see another supply zone here. You see. So in the minor time frame, so I'm just gonna make this another color. Maybe I don't know, maybe bluish. So yeah, I think that's okay. So you can see in the minor zones how price was rejected at this area. So now we can say, if we sell as intraday traders, if we sell, remember, you don't want your winners turning into losers. So if we sell, probably if this level won't hold, we're going to take profits here. But if it holds, we're going to take our profits here. So it's not a very decent trade, but we are intraday traders. We accumulate as many pips as we get. So 24 pips is not bad for an intraday trader. Yeah, but just don't get greedy. Don't get greedy. Just be satisfied with whatever you get. Book a profit and go. But yeah, that's just simply supply and demand. So because we're intraday, we also want to see on the 30 minutes. What is price doing on the 30 minutes? We can see now we are having a pullback. What patterns can you see? You can see some small patterns. See. Also, there are supply and demand zones in the 15 minutes, in the 30 minutes. But they won't be for long. There won't be supply and demand for long. You can see this one here, consolidation, is an area of interest. That's why the market made a pause here. You can see market rallied up, came here, made a pause, then dumped it. Came here again, made a pause because of the 1 hour zone. Then dumped it. Came to the major zone, then went back up. We can see that when it came here, it made a consolidation, it made a hammer. I don't know. Other suppliers and supply and demand traders maybe were trapped here. They went long. Then maybe price came and stopped them out. You see, depends on what is your risk profile. Then now price just comes to the same level. On the same level holds. What does it tell you? Supply and demand are areas where liquidity is being generated and also liquidity is being provided into the market. So in the 15 minutes, we see that there's pretty much some bullish activities going on, bearish activities going on, but why? Because we have seen these levels on other bigger time frames. So as intraday traders, you want to be very, 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 very careful in making your decisions. You want to see everything. You want to know where the liquidity is going to be taken away from you. You want to know where you're going to get the liquidity. Other than that, this is just simply supply and demand. So feel free to ask me any questions on my Telegram. My Telegram name is, I'll just type into you, so you can just go and search at CarlFX. CarlFX. I'll put this in small letters. CarlFX. Feel free to ask me anything related to trading activities. But don't ask me because you just want to be fed. Just ask because you want to learn. I'm happy for people who want to learn new things, new stuffs every day. Until then, I think this was a nice video. I plan to be a short video, but I see it has taken a lot of time. So thank you very much. Bye bye.